The market bounce that started at Friday's open continued today with the S&P 500 closing at 59.74, right near Friday's intraday high, and the S&P just barely getting above the zero gamma exposure level. We also saw large volume coming in at the 6,000 strike. We've been seeing that the last couple of days, momentum continuing towards that level, and so it looks like either tomorrow or maybe at the end of the week after the holiday, 6,000 could be a potential next target on this rally attempt that we've been seeing. If you recall, the market tanked after the FOMC meeting last week, and so we're just now making an attempt to get back up into those levels, make up some ground. We've still got quite a ways to go. That's going to be a big hurdle getting through this next level between 6,000 and 6050. That currently is our upper dealer cluster zone, so there could be some congestion, some selling pressure in here. Switching gears here to the SPY, we've got obviously the same basic technical pattern as we have on the S&P 500. It's a little cup and handle that's forming. We've got a pretty wide distribution of gamma exposure data between 580 and 610. And so one could argue there's a little bit more bearishness in the SPY than on the S&P 500. So that's something to watch out for. We always like to look across the various indices and index ETFs to try to get a sense for where the gamma exposure is across the market as a whole.
Good points on the broader market, Anthony. I wanted to point out a couple of things on the VIX, which of course had that spike last week, and they crushed volatility all the way back down. And I've got the 2-hour chart pulled up right now, which shows that we're back at basically, we're below 17 actually, 1677. I focused on the 2-hour chart because we're at an interesting zone on the 2-hour chart. If we were to zoom out, you could see that if we were to lose this 16.5 to 17 area, we could go back to 14.5 or 15. So we are at a pretty important crossroads here for the market.
Yeah, it definitely seems like we're at an important crossroads. You know, as I mentioned, the SPY looked slightly more bearish than the S&P 500. S&P 500 is actually in positive gamma exposure territory today. The SPY, however, could not quite make it back into positive gamma exposure territory at the close. And so this is what happens at these kind of important market crossroads. You have a little bit of a mixed signal across these indices and index ETFs. And you can see here the Qs are actually in positive gamma exposure territory. So we've got the S&P 500 in positive gamma exposure territory, the SPY in negative territory, and the Qs in positive territory. So again, that mixed picture just telling us that we're at an important decision point here in the market.
We don't talk about the Dow quite as much as we talk about the S&P and the NASDAQ. But I noticed as the NASDAQ was topping, the Dow had already started dropping. So actually, it's kind of interesting to me that once the NASDAQ turned and started dropping, the Dow just continued dropping. So it really got beaten up a lot relative to the NASDAQ. But there's some interesting things happening here on the chart. You can see that DIA lost the lower Keltner channel, but has since regained it. Barely, just right here. And also it's now above the whole moving average at 427.30. And so I'm not going to assign a lot of meaning to whether this is a continuation of the bull market or anything like that. But what I do think has good odds is some sort of rebound off of this decline. You know, this was a record-setting greatest number of consecutive down days since 1978 for the Dow. So, you know, pretty historic in recent history, at least. So I would not be surprised to see DIA continue higher. I don't know if that means the rest of the market's going to go up or not. We could easily see the Dow diverge from the NASDAQ, just like we saw this happen to the downside a couple of weeks ago. Let's take a quick look at the gamma picture. You can see we had a little bit of a preview with the Dow gamma going positive Friday. It did drop somewhat today, but it's still positive. We also tagged that dealer cluster zone, and we have volume at a lot of these higher strikes, 430, 435, 440. So this 440 matches with that middle Keltner channel on the last chart that we looked at. So I think the Dow seems to be poised for a potential continuation of this rebound to a point.
Thanks, Sean. Let's take a look at Nvidia. Nvidia, huge move today, up 3.45%, nearly getting to the 140 level. If you recall, in last night's video, as well as in our videos last week, we mentioned this 140 strike, the large gamma exposure that has been sitting there for quite some time. This was visible all the way back here as we were tagging our lower dealer cluster zone. We kept seeing volume coming in at the 140 strike, continued volume today as well, over 500,000 contracts traded at this 140 strike. So it looks like market participants are expecting a tag here in the coming days. Nvidia is actually a name that we are trading actively in our community Discord. And so I'm actually looking for a move above this 140 level. This will bring us right into this upper dealer cluster zone. There could be some resistance up here as we get above the 140 strike. Oftentimes what will happen is dealers will be forced to sell shares of the underlying security as they are hedging their options positions. And so you can see the entire market is basically focused at this 140 strike right now. And so dealers, in order to hedge themselves, are going to be forced sellers above 140. So we could see a little bit of selling pressure above that strike. However, we do see gamma exposure and volume coming in at some of these higher strikes, 145 and 150. And so I suspect after some pause at the 140 level, Nvidia could make a further move higher, potentially into January, trying to tag this 150 strike. So that's something we're going to be watching for. Again, really happy with the move up to the 140 level the past couple of trading sessions.
All right, let's take a look at Procter and Gamble. That's a PG. And you'll notice a theme with a lot of the things that I'm pointing out. The value names, quote unquote, are a lot more beaten up than the technology names, with the exception of some of the semiconductors. And so this is a great opportunity to combine GEX with a look at some of the names that are very oversold. And Procter and Gamble definitely fits that. The chart itself doesn't look very bearish to me. I mean, we have the Keltners that are somewhere between neutral and an uptrend. And we're at the lower, we touched almost perfectly the lower Keltner channel at 166. We'll see in a minute that also coincides with a gamma cluster at 165. And today we actually, after touching that, we regained and closed above the whole moving average, which is 167.90. So as long as we hold above this 167.90, preferably, and especially over this 165, 166 area, you know, I kind of want to see what happens if we can rebound further and get close to this 173, and above that, of course, would be 180. Let's take a look at the gamma picture, see if that agrees with what I'm saying about the chart. We haven't quite touched that dealer cluster zone at 165, but look at the volume up at 180. That's interesting. In at 175, and that coincides with this dealer cluster zone. But overall, Procter and Gamble looks poised to potentially rebound after getting really beaten up over the last week and a half or so.
Thanks, Sean. Let's take a look at Meta. Meta trading right at the 600 mark here in after hours, up 2.5% today. It's come all the way back down to this 600 strike, from the mid 500s all the way up to 635 up here, and then back down, bouncing off of our lower dealer cluster zone. And this 600 level has been a critical level for the last several months. First, it was a target, which was tagged multiple times over the course of the last couple of months, finally breaking through that, as I mentioned, and now coming back down again to this level. But one of the things that I wanted to highlight here is all the positive gamma exposure. If we just scroll up the chart, you can see we've got big gamma exposure basically between the 620 and 650 strikes, but it doesn't stop there. There's continued interest at this 700 strike. And I think a lot of people have been calling for 700 on Meta early next year, and it looks like they're starting to position in the options market for that possibility. So that's going to be something to keep our eye on. I think above 600, above the zero gamma level here, things are going to start getting very interesting. These gamma effects will really have a big magnetic pull on the price into this zone here with all this positive GAC. So that's going to be kind of a first stop, which would essentially bring us back into our upper dealer cluster zone. So we get into that level, and then some consolidation, and potentially we can start watching for a move up to the 700 strike. That's all speculative as of right now, but we will continue the conversation and monitoring of GEX in our community Discord. If you guys haven't checked out our community Discord yet, I'll put a link down in the description below. Really encourage you guys to come on in and say hi. It's free to check out. Also, if you're interested in accessing our gamma exposure tools and our option flow analytics, head on over to geeksoffinance.com. You can sign up and become a member, and we're actually running a $300 off holiday special off of our yearly portfolio manager tier subscription. So be sure to check that out as well. I'll put a link down in the description below. Thanks so much, everybody, for watching, and we'll see you guys in the next video.